Hello, everyone. Thank you for joining today. We have an incredible guest today. David Diranko is a data scientist at IBM and a value investor. And today we're going to learn about how he's applying his incredible AI and mathematics skills to the world of finance and investments and what we can all learn from that. So, David, I'll pass it over to you. Tell us your story.
Hi, Vicky. First of all, thanks for having me. It's a pleasure.
Absolutely.
And yeah, I think we'll have a great conversation. My background, as you mentioned, I'm a data scientist by profession. And how do you square the circle with value investing, I guess? My background is I started my bachelor's degree in business mathematics in 2016 because my original plan was to go into asset management and become portfolio manager, the usual path you would go through. But quickly found out that the way institutions manage money, like especially like large insurance companies in Germany, they don't invest very business-like. Like value investors, you try to value the business and then figure out how much to pay for the investment. But that's usually not how big institutions invest. They more focus on asset liability management and correlations, and like we learned a whole lot about options pricing. And the math is interesting, but I figured out that's not what I wanted to do as a profession. So basically at the end of my bachelor's degree, I was there and thought about, okay, what to do. And in Germany, because university is very cheap or basically free in Germany, so it's pretty usual to do a master's degree as well. So I figured out, okay, what can you do with math? And finance is one idea, but the other one is this emerging topic called AI and machine learning, which is basically scaled mathematics. And yeah, then I applied for a master's degree in mathematics and data science at Technical University Munich. And that I thought, okay, learning how to code doesn't hurt, I think. So went down that rabbit hole for 2 years, and I really enjoyed it. I really enjoy coding, and but the investment field, like especially value investing, I never left because I thought many people say if you read Warren Buffett, like either the way he invests, either it clicks or it doesn't, and for me it definitely clicked. So I kept on pursuing investments, like invested what I made as a working student, kept investing, and kept learning. And yeah, today I'm a data scientist at IBM, but I'm writing an investment blog, and I think that's how the both of us got in touch, where I share my own investments, my investment thesis, and my thoughts around investing. And I think that's why I have this both professions.
You were writing an investment book, which is pretty amazing. So tell us about what are you trying to tell through the investment book? What kind of things are you thinking of covering from a high level perspective?
Yes. The idea to the blog mainly came from me investing by myself, because apparently in the tech space there are not that many value investors around, and I was basically doing it by myself. And at some point, my girlfriend, now wife, said like she couldn't hear me anymore, like me talking about stocks. She said, "Hell, gosh, David, you have to find someone to talk to." And I thought, okay, I'm doing this for 5 years now. It may be a good idea to find a community. And
yeah,
I heard about this topic. I don't know if you were familiar with it. It's called learning in public. And it's basically if you put content out, then the Google, YouTube, whatever algorithm works in your favor, because it will match people who share your interest if you create. And I thought, okay, that's an interesting idea. And also, like, I quite enjoy writing. Like, I've no issue to write down my thoughts. And I thought it's a very valuable lesson as an investor is to write down your investment thesis. So I started the blog in November last year, and the core pieces only I cover, it's my investment research process. I cover one company a month where I do basically the full business analysis and valuation, and I just write it down, and then I share it on the blog for other people to read and reach out. And yeah, that's how it started. And I'm surprised how good it works and how many people are actually interested. And now I have like 2 articles a month. One's the deep dive, but the other one is more like what I call investment philosophy. So I share my thoughts, and also like how to, like, a recent piece that I wrote is about, okay, from a AI practitioner's perspective, is like how who will benefit from AI. Like that's I try to just.
So tell us more about that piece for those of us who may be not familiar. Give us a quick
Sure.
summary of kind of what you covered there.
Sure. I mean, I had like the article had two pieces basically. The first one was to explain like what AI actually is. I mean, it's more for the investment crowd. They're not that familiar with AI. Maybe your listenership or will
Sure.
probably be more familiar with those topics. It's like, what is AI? What is generative AI? Where are the differences? And most importantly, okay, how does the training and how do the models work? Because basically those large language models, they are trained by filling the gap of sentences. And yeah, apparently if you scale this, like you get emergent behavior by those models, which I think surprise everyone, including
Right.
the practitioners. So
Lots of
that's pretty
hallucinations,
interesting.
right?
Yeah, it's amazing. But you also be aware that, I mean, that's how the models are trained. So it's very difficult to control the behavior. And I think that's what many people observe is you get hallucinations. It's very difficult to get the source information because, I mean, it's somewhere hidden in the weights, and like you can't really find the source because, I mean, if you imagine like it's just statistically what is the most pragmatic or useful way to continue the question with an answer. So there is no way to get the source information. So that's where
Yeah.
I think the application breaks down at some point. Yeah, and I just wanted to educate on also, like, if you know how the algorithm works, it helps you to define which use cases are applicable or not. I mean, it's very, very useful if you want to actually create something, some content or something like that, where the accuracy of the information is maybe not the most important piece, but if you want to, if you're in a high stakes environment, you probably won't rely on a generative algorithm where you know that it can happen, that it makes stuff up and you can't verify the
Yeah, because
information.
you can't verify it and trust, and you
Exactly.
need like probably agents just doing QA of whatever the answer
Exactly.
is.
Exactly. Yeah, I think many people are still not aware. I mean, you have to be familiar with how the algorithm works so that you can, yeah, understand maybe or where the limitations are. I mean, they're always like it's always evolving. I can't even keep up with all the developments and how to fix these issues. So, but if you have that mental model around it, I think it will help you understand the theme.
How do you use that knowledge that you have as a data scientist to pick the stocks that you research, right? Because the hardest part sometimes is just to get an idea as to which company to research in the first place.
Exactly. I mean, maybe it's surprising, but I don't use a lot of technology in my investments. So I'm not specifically I don't invest in a lot of software companies because what I found out is, I mean, like open source technology is very fast evolving and it's very difficult to find the winners. And most
Yeah.
often because they're so fast growing, they are very expensively priced, and so I tend to shy away with those. But I mean, it helps to. I mean, it always helps if you can write code. I mean, you can accelerate some research. You can accelerate some screening, maybe at that point. But where I tend to think about the most currently is, okay, if you look at the stock market, you have a very top-heavy indices, especially in the US, with all the technology giants who one way or the other are leveraged to the same theme. I mean, if you use cloud computing and AI, I think all of them are right there. And also like this was the second part of the article is the question, well, who can benefit in the end of AI and what
Right.
can we learn from history? And I mean, I don't know. That was the short answer, but I mean, I just went through three scenarios. I mean, the first one is the one that, at least if you look at the valuations, everybody is thinking is the correct one, is that the hyperscalers like Amazon, Google, and maybe Apple will make all the money potentially because they control the compute. It's very expensive to run these algorithms, and you need a lot of money in capex and in hardware to do that, and they have enough money to scale, and then they have the applications, and somehow they can figure out ways to make money from it. Because I mean, currently there are not really, let's say, very exciting pure AI applications where you can actually monetize that. I mean, they use it. I mean, Microsoft uses it in their Office fleet and Office in the cloud and Google in their Drive suite, but it's always more leveraging the original service and improving it with AI, but not like a revenue driver per se. So I think the idea is that they will figure out a way, and I mean that's perfectly possible. But one thing is why to think maybe one level further. If I mean in the early 2000s, if we think about it, the leading companies back then, Cisco, etc., who did all the capex and built all the infrastructure for the internet, were not the final beneficiaries, because it was the smaller companies that built services on top, and services that you cannot imagine right now, because back then you could imagine as well. And I mean, history doesn't repeat, but sometimes it rhymes. And I mean, if they're now building all the cloud infrastructure and all the hardware, and maybe they will figure it out, but maybe it's someone different. And I think the core.
So who are you betting on? Who is going to be someone different? Because that's very confusing space right now, to be honest.
It is. And I mean, what I'm currently looking at is the second layer. I mean, the first layer is the obvious one. The first level thinking is like the hyperscalers. But what I think will be very interesting to monitor is if you think about what is the core asset. I mean, maybe it's the algorithm, okay, but the algorithm, there are open source. I mean, Llama from Meta, I mean, it's an open source model. And if you have access to the cloud, I mean, you can run these models. Maybe it's a little more expensive, but I mean, you can do it. But what is the most valuable part? And I think it's your data. And if you're a business that has very valuable data, I think you can do very interesting things with AI. And I mean, currently, I mean, if you look from a governance perspective, what I mean, Google and Microsoft, I mean, they have governance issues because I mean they're accused of stealing data. I think it was the New York Times who actually, I mean, they sued them because they said like they're using the data from their articles and they're not allowed to do. And I think there is a very, very valid point to that. I mean, if you just crawl the internet and take everything that you can, I mean, that's not. I mean, I'm not a specialist in the regulatory, but I think that's not the intention. And if you think, like, if they're not allowed to use all the data, I think the winners will be those that have very good data. And what I'm looking at is a business that is not tech native, but that knows how to use technology to its advantage. Maybe it's, I mean, I don't know, like pulling something off. If you're a mining company and you have a very good data set and you know you're maybe not a tech company, but you can use the algorithms like to increase your probability of finding whatever you're drilling for, be it oil or some other commodity. I mean, that would be a huge advantage over your peers, because what I think is very important is if you don't know how to use technology, and if your organization is not ready to use data, or you don't have very good data governance processes, it will take very, very long to get up to speed. And if you're the one company who is not tech native, but just like has solid best practices and can use that, I think you have an advantage. And I think the market is not there to value those. And that's what I'm looking for, because usually those businesses are valued like their peers, but they have like some tech asset that they can leverage. And then it's easier, because then, I mean, what I like to do as an investor, I want to get the base business and I want to get the optionality for free. And you don't find these with the hyperscalers, but you definitely find those in this section. So that's where I'm currently am. And I mean, the third stage would be like,
Can I just ask a quick question?
Yeah, sure, go ahead.
If that's all right, because I find it super fascinating. So there's many existing companies, right, that have like lots of data. They've been having databases, collecting data, but it's a mess, right? They've been collecting it in different silos. The data can't be cross-referenced. It's like, yes, I have a lot of data, but I have no idea how to take advantage of it. Do you see a solution to that problem, or is that just something that you thought of? Or
yeah, I mean, I think that's usually what those businesses try to do is, I mean, they have their mess and then they want to put some AI on top that helps them with the mess. I'm very skeptic. I don't see that working very often. I think that most businesses don't want to hear that, but I think the best thing is to start from scratch. I mean, you have the data, but set up your data lake. I mean, you can, just go with one of the cloud providers And I mean, do it from scratch. I mean, you have the data. I mean, you have to integrate it, like make sure that it's accessible. And if you have that, I mean, this will take time. This is why I mentioned it. Like this takes a lot of time. But I think then you're ready, and then you can. Then a data scientist can actually work with it, because I know of a lot of organizations. Everybody now has a data scientist,
Right.
and it's also like what I find in our business is less and less business comes from actually doing data science for clients, because they have the data scientists. And quite frankly, as a data scientist, you have to know the industry and you have to know the domain very well to do good work. And I think they will. It's a good thing. But where the struggle is basically, you don't have the right quality of data, and then you build a POC, and then what? I mean, you always have your Jupyter notebook, and then what? You can't bring it to production, because I mean the organization, it's not ready. I think, I mean, the best thing is just, I mean, it's expensive, but it's if you want to utilize data, that's the best thing. I mean, start from scratch, build the organization, build the data infrastructure, and then you can add services. And then I think you will be amazed if you have at one point the data infrastructure there. I mean, good things happen, because I mean, smart people can play with it, can figure it out. And then, I mean, the way to production is very short then, because then, I mean, you have the curated data sets, you have the infrastructure, you can apply
I
your
love
MLOps
that.
best
I mean,
practices.
that's such a huge point, and that's what I'm finding as well, is what you're saying. Data is the new gold, right? So if you have a way to create a place where you can store it and organize that data, then you can start getting insights and information from that pretty easily. But if you just have a mess and you're like you expect AI to magically fix that mess, it's probably not going to work.
Exactly.
So I'm sorry to interrupt you. I just think it's just an important point. And
No
then you
worry.
were
No. That's
going to your third
exactly the
point.
point.
I want to make sure that
That's exactly the point. And I think, quite honestly, if you're an organization that doesn't have it right now, I mean, you are disadvantaged, because I mean, it will take time and it will take money. And I mean, maybe a competitor will have a better data infrastructure. I mean, like, first move advantage is real, especially in technology. Yeah, and this is why I try to focus on these. And maybe and that was the third part of the article. I mean, if you look at the internet, at some point, I mean, you can argue now every business is a online business. So everybody adopted the internet, almost everyone. And I think at some point, if the knowledge is democratized, then I mean, and everybody and every business uses AI. What usually tends to happen in capitalism is that the consumer, I mean, businesses have to compete on price, and then the consumer just gets a better product, a better service. Yeah, that would be the final scenario that maybe plays out, maybe not. I mean, there are always buckets in some industries where the companies can harvest the profits for a very, very long time, and you want to find those. But those were my three possible scenarios, and it's all where the data is, who's allowed to use the data. Is it free? Then maybe the hyperscalers really have an advantage. If it's on the business level, then they have the advantage. But then it's also, if at some point it's democratized, I mean, then probably the consumer.
So you look mostly at public companies just because the data is already there, or do you find private companies as well that you do analysis on?
Exactly. No, I'm focusing on public companies, but quite frankly, my wallet is not big enough to buy a private company, so that's one issue. Yeah. And yeah, I think like what I like about public companies, I mean, you have a lot of information. The information is audited, because I mean, you have to have a high standard of say data integrity and also reporting integrity. I mean, there are always frauds, but it's less likely that that there is a fraud in the public market. This happens. And also, I don't really like the private negotiation. I mean, in the public market, there is a set price, and I can figure out if that's a fair price. But in a private, I mean, if I negotiate with a private seller, I mean, it's his business. He has a huge information advantage,
right.
And I will never know if if he cheats on me, like it's impossible to figure out. So, and I have no experience there. That's the last point. So maybe, I mean, I'm still young enough, so maybe that I will go down that route at some point. But currently, I'm 100% focused on public markets.
Find that private markets are much more relationship based and versus data based. So that comes with pros and cons, right? Like relationship, if you build a relationship and you have trust, you could maybe get more information even than if you can from a public company. But again, it's all about that trust level, and you have to take time to develop that, versus public, you have some kind
Exactly.
of audit process already in
Yes.
place that you don't have to
Yes.
worry about that.
Exactly.
It's very, very true. I love that approach. And so I want to, I'm not trying, we're not a financial
No.
advice company, or we're not giving, but I'm just super curious, from a value kind of investor perspective, how do you find those nuggets of companies that are undervalued that you're willing to pay the fair, price for? What is
Yeah.
that fair price?
Yes. Okay, but first, like maybe let's start with the idea generation. Like, where do you get the ideas? Um, I mean, I do run screeners. Like, you can just use a market data provider, and then you usually can implement your screens. But I mean, I find interesting companies there. But I mean, usually there is a reason. I mean, everybody can run a screen. You always have to think about where your edge is, and I mean, if everybody can do it, I mean, why is it still cheap? So sometimes there are interesting businesses, but quite often my best ideas I get from other people. Like sometimes I think Twitter is a very good source if you're in the right, let's say, bubble. There are shared, like quite honestly, like some subscribers from my blog, like they just send me over ideas because I mean I write about what I'm looking for, and then they say, hey, you wrote about this, but have you looked at this? And then quite often, no, I haven't, because I haven't heard of this company before. And the third source is like other investors. I'm growing my network I'm friends with some very smart investors, and we share ideas on occasion. So these are my top three sources, and I think, yeah, maybe from like what I get from fellow investors is the highest quality. Then maybe some from subscribers as well,
Yeah.
and then I mean occasionally screeners.
So kind of word of mouth is the best, still the best.
Yes, it is. It is. Yeah, because usually, and that's what you meant, like how to value the businesses. I mean, usually to calculate what the free cash flow and the return on invested capital is. I mean, everybody and the computer can do this as well. And I mean, everybody knows that you want to buy a business that has high returns on invested capital and can reinvest those and grow very fast. And
Right.
I mean, that's what you're looking for. But there is no edge in knowing that. So what you're usually looking for is where, I mean, it's not that obvious. So it's not clear in the numbers, because maybe what what sometimes happens in smaller, like I focus majorly on small businesses, like sub $1 billion market cap, or even lower in the 100 millions, and not a lot in the US, because I mean competition is a real thing here.
Yeah.
What I find in smaller businesses is sometimes in Europe and in Japan, if they did a couple of acquisitions, then I mean then it looks like they would be less profitable than they are, because I mean that's how the accounting works. You have to amortize.
Mm.
If you acquire intangible assets, you have to amortize them,
Yeah.
and then it looks like you're less profitable. But I mean, you won't need to reinvest those intangibles that you depreciate. So, I mean, the profitability looks lower than it actually is. I mean, those are like sources. I mean, that's maybe you get. That's a very simple example, but I mean, still
No, that's a
sometimes I
perfect
find those.
example because of different accounting methods. You
Yes.
can't
Yeah.
compare an American company to Japanese company because they could be
Yes. Yeah,
completely
exactly. Like in Japanese, they amortize goodwill, which you don't anywhere else. But I mean, it's also like accounting. But I mean, quite frankly, it's just, I mean, you just can't take the numbers. You have to look. I mean, look at footnotes and look what is depreciation, what is amortization, I mean, and what is real. I mean,
yeah.
if you implement your own software and you capitalize it, I mean, you have to reinvest. But if you acquired like some brand value or a customer relationship, I mean, you probably won't need to reinvest those. So I mean,
Mm.
that's where, I mean, it's just, I mean, it's work. It's not
Yeah.
always there. If it's not clear in the numbers, like then you take a look and then you find maybe something's undervalued. But I think,
So it's
yeah,
more of a personal question. You don't have to answer, but do you invest in every company that you research, or do you kind of choose and pick, or what is kind of
yeah.
how do you
No,
build a portfolio?
I don't necessarily invest in all those. I mean,
Yeah,
in the first that I wrote up, I invested because I mean, I mean, I want to write the best ideas. So I mean, I took my portfolio in the beginning, but
sure.
now um, now I'm just writing up interesting ideas every month. I mean, sometimes I
Okay.
invest, sometimes not. I mean, I'm quite open. If I mean, the last one I published, also like where the critiques are. I mean, if I find something that I'm just not that comfortable with, I will write it as well, and then maybe I don't invest. So I want to publish very like actionable ideas. Like, I mean, you could have a different perspective than I do. Then you can like say that's a really good investment. Usually I want to focus on very good businesses. and then you can argue if the price is right. And I won't be learn or want to inform as much as I can about the business and how I see the business. And then I will do my evaluation, and then it's very simple for you to disagree, because I think that it's the most value is there. If I have to look at both sides, the good and the bad, and then I usually give my interpretation, and then you can disagree, but then you have the idea there, and you can go. And I don't want to basically tell you how great this business is. So that doesn't help anyone, I think.
No, that makes a lot of sense to me as well. I just want to kind of know from just a high level perspective, when you specifically around AI, right? So a lot of the things we talked about are business things, that you think about. The footnotes is something you mentioned that you look at. How does AI help you specifically identify, those good businesses?
Yeah.
Like, what do you
Yeah.
how do you write that, or what question do you ask from a
Yeah.
prompt perspective, maybe, or?
Yeah. I mean, I'm to be honest, I don't use any AI software currently to help me. But I
Yeah.
mean, I think there are providers out there. I mean, I don't think you can use it. I mean, I don't think it's very difficult to analyze some of the reports for like what you're looking for. I mean, there are if you look from an value investor's perspective, you're always looking for some competitive advantage of a business. And I mean, there is a set of advantages that you can have. I mean, maybe you have economies of scale, you have a network effect, etc. And maybe you can screen, or you can just go through all the filings and look on what the management says. I mean, I know that hedge funds use basically what's the tone of or which words are more used. So is it more optimistic or pessimistic? And you can do something like that. But I mean, at the moment, I think those tools are sometimes very expensive, and I'm just not. I mean, my process, I know what I'm looking for, but my process is, like I mentioned, it's like looking here and there, because I think that's where the opportunity is. I mean, if you run a bigger fund, you can be more systematic and like also spend more money. I think it's a very, and I think some providers do that. I mean, you can systematically go through footnotes, because usually they're very nicely. I mean, it's always the same footnote that refers to the same item in the income statement or in the balance sheet. So I think there are solutions maybe that find, for example, like lease liabilities that are like off balance sheet debt, for example. You can find those, and I think there are providers doing that. I think that's a very interesting thing. But I mean, what I would be interested in is maybe go through like all the public filings and crystallize the core business model and where the advantages, and maybe make a comparison to peers. So you can like simultaneously go through all the competitors and maybe say like to determine, okay, sometimes if you have cyclical businesses, and then you have to find out, okay, is this a cyclical high, or is this business doing something better or else? That their competitors don't. And I think there is an opportunity like to make the comparison easier, because currently I just read all the filings.
No, that makes perfect sense, because then you're looking at the market as a whole, right? So you're
Yes.
like, okay,
Yeah.
here's the market, and
Yeah.
these are the competitors, and this is how they're playing in that
Yeah.
market. So you
Yeah.
can start seeing patterns and trends.
Yeah. But maybe I think because I work with AI, mean, I don't trust it enough at the moment to make these decisions for me. And
Yeah.
it's always like, if I used AI, I mean, if let's say 5 years out or 10 years out, I mean, AI adoption in investment is that far. I mean, the probable route I would go down is, okay, what is maybe not considered with AI, or what is discarded, and then I will
Yeah.
look at those, because maybe that's something wrong with the business. But if it's severely mispriced, I mean, then there's the opportunity again. I think it's always the idea, like what can you automate, and where can you systematically invest, and maybe what's missing, and then
Yeah.
what is left out, and look at those with your own eyes. I mean, maybe that's always the interesting part, I guess.
It is super interesting part. One of the things that my previous guest mentioned, he has his own real estate investment company, and he mentioned about data, but he's like, it all comes down to people. And we kept coming back to people. It's like AI will never judge a person or have a great way of understanding like that team that's leading that company. What is the prospect of that team? How do they work together? Like, are there issues internally that maybe interpersonal issues that you need to think about? Things that are not in the numbers,
Exactly.
but are super important in terms of if you really want to put your money into that company, is what is the perspective of that team and can they actually take it to the next step?
Yeah, that's a very important point. I mean, management plays a huge role in a business and in the future prospects. And I mean, how do you judge those? I mean, I don't know if I haven't an answer. I mean, I can read and I can basically keep track what they said and what they promise,
Yeah.
and like read and listen to how they communicate. And then I can maybe judge those. Maybe you can do some sentiment analysis, but it's always hard. I mean, you can't predict the future, and I mean, AI can't predict the future as well. I mean, it's just unpredictable, and usually you don't. I mean, history doesn't repeat, but it rhymes sometimes. So what I find is it's very hard. If I mean, how AI works is basically it learns from previous patterns. But I mean, if the patterns are not accurate, I mean, that's one of the core rules. I mean, your training data has to match your inference data. I mean,
Yeah.
otherwise, like machine learning doesn't work. And I mean, that's all the time in the economy and the real world. So I mean, I don't know if that will ever be possible, and I would like be
So
very
how do we
careful
adjust for that
applying
in the
the
world that's changing so quickly? Like
exactly
that's my thing. Is like I don't know
exactly.
what tomorrow is because there's just so many dynamic variables that can play out in different ways. How do we make that interpretation into the future if we don't know what the future is and it's changing
That's
quickly?
absolutely true. Yeah, and I mean, what I come down to is it's very simple. I mean, I don't want to rely on predicting future outcomes of my businesses. So I mean, I'm very price sensitive. If I have to go more than 3 years out to make a stock price work, I mean, I just don't do it.
Yeah.
That's the thing. I don't want to rely on predictions, but on what is what is there right now and maybe in the near future.
I love it. So you're really looking at 3 years or less. You're
Yeah.
like, okay, 3 years I can say kind of will be
Yeah,
similar,
yeah.
right?
And then I usually don't want to have a lot of inflection. Like I don't want to bet on change. I want to like what they've done in the past, they can continue to do in the future, and it doesn't need a lot of imagination that they continue to do what they can because they have a very good service or product. And then I can say, okay, in 3 years, given the current valuation, I can earn a very good return. And then if it continues to be good, I mean, then I have a larger payoff. But if it's just average and then it declines, then I'm still protected. So that's the
Yeah.
philosophy.
How do you weigh the importance of those variables in your analysis, right? That's the other big thing is the future versus like, hey, if the company, a lot of things, for example, in real estate investment, which are private markets, they look at, well, what was the historical kind of return of this
Yeah,
person, over the last 10, 15, 20 years. And if they've done pretty well, maybe I can extrapolate that they
yeah,
probably have enough experience to do better in the future. Do you
yeah,
find that that's a good
yeah.
assumption to make, or would you
Yeah,
make that
well,
assumption?
no, that's I think that's a very good point. What I will usually go through is, I mean, I will look at what has the company done in the past? Like, what were the growth rates? I mean, what were the returns on capital? Like, is it very stable? Does it change? And why does it change? And then I always want to link it to the business. Like, what is it with the product, the service, or maybe the culture, if I can judge that. And
Yeah,
then what I will usually look at is what are the base rates? Like, what is the average growth rate of the industry, and what is the average return of invested capital over the long term that businesses generate in those industries? Because very highly likely it will go down to average. I mean it's what usually happens. You have mean reversion in industries because I mean if you have outsized returns, others start to recognize and compete, and then if you don't have your special sauce, I mean like your returns will come down. So
yeah,
what I want to find is take the current what is currently or what they're currently doing very good
mhm,
and gain like through business analysis find out, okay, I'm confident that what they can do, they can continue for 3 more years because I mean the service is very sticky. Maybe they have a first mover advantage to some technology, maybe that. And after 3 years, like, okay, what if they then start a decline? Like, what is if then they return to average over, let's say, 10 years? I mean, because
yeah,
competition kicks in. And with these assumptions, I want to make an average return, and that's usually around 10%, 8 to 10%, because that's what the market returns over the long term.
yeah,
Because then I can say, okay, like if I'm right and the business is actually better, but the market thinks it is not, I will still earn an adequate return. But if
mhm,
I'm right, I mean, it can really have like, because obviously the largest returns are in the tail. Like if they can really continue to push and continue to grow faster and with higher profitability, then that's where the real returns are. And that's where I try to find these asymmetric bets. Like assume that it's just an average business and then pay the average price and then basically hope to be right and earn outsized return.
To write it out, kind of to have it turn around.
Yes.
Yeah, that makes sense. I love that. Well, I want you to tell more about I love that concept you introduced, learning in public. Tell us kind of how people can find you, like how they can subscribe to your newsletter and learn more about you.
Sure. I mean, you can subscribe to my blog. It's called contrariancashflows.com, one word. You can subscribe, then you will get all my articles in your inbox. You can also find me on Twitter. It's just my name, David Diranko. I mean, I use it only for investments, like you won't find any data or AI related content there. I use it for my investment network. And you can find me on LinkedIn as well. There I will share whatever's up to my mind. And just reach out if you want to share some thoughts about investments, AI, data science. I'm always happy to discuss and learn, get to know new people.
Yeah, that sounds awesome. I will definitely sign up. I hope everyone else does too, because I've learned a lot from you today, David. And I love your approach. I think you have a lot going in terms of how you're perceived, kind of the business analysis. Sometimes people miss that very important aspect of evaluating. So thank you so much for your time today. This was a great discussion, and I can't wait to connect again.
Yeah.
Take care.
Thank you very much for having me. It was, I think, we had a great discussion, and I hope, many people can learn something, and I hope it was an interesting discussion for the listeners. And hope to connect soon.
Yeah, it was awesome. Thank you.
Bye.